Discuss this. I mean, I've been quoting these numbers all day. June private fundraising was 16 billion valuation for DoorDash. It was at the IPO price 102, which was already massively increased, would have been 32 billion. Closing today worth more than 60 billion. I mean, that is extraordinary, isn't it?
It is. It's absolutely extraordinary. I think there's a combination of events driving this whole thing. There's a fear factor in there, fear of missing out. Then there's a broader theme. There's a risk-on sentiment overall in the macro economy. So I think all that is kind of playing in here. Then there's a scarcity factor also. So all that is driving this whole thing. And it's not unlike any other of our portfolio companies that come out, especially the consumer tech companies. The expectations are way ahead of reality. They come out blazing, and then they settle back, especially after they report the quarter and people see the real numbers. So I think at this point, it's ahead. It's unusual. It's way ahead of what we had expected, or we would have expected. But I think it'll settle down at some point. But overall, it's a good statement. It shows the positive sentiment in the market, shows that people are excited about stocks right now.
Well, certainly excited about this particular stock. Santosh, does this give them the ammunition to actually crush Uber and other rivals, and such that we'll have a one-player market, or is this a sort of validation for Uber Eats?
No, it's more a validation for Uber Eats. They're nowhere close. They have 50% of the market, but still a long way to go. I mean, they have to prove themselves. This valuation does not show, I mean, it shows more than what they're capable of doing at this point. They need to grow into that valuation, and it's going to take a while. I remember when Lyft came out, did their IPO, people said, forget it. It should be a $5 stock, $10 stock. No one's going to do what they're doing. It doesn't make a business sense. It will make more sense. This is a logistics company. The last mile logistics is going to be important, more so as our lifestyle changes more and more. And in the post-pandemic world, which DoorDash has to prove itself, I think you will see that they have a place there. Last mile logistics is important, and they're going to be delivering more than just food. It's going to be a whole set of consumer goods. So I think it has a place in there. Whether it does it alone or in combination with a bigger company, we don't know yet. But definitely there is a place for this kind of business. Delivery as a service category is here to stay, and they are the leaders.
What strikes me about this whole DoorDash Wall Street bang, I mean, it really was an incredible debut, is it's emblematic of the divide that we're seeing in terms of the real economy, the winners and losers. If you think about who relies on DoorDash, it's the restaurants who are struggling and closing by the thousands in this country and having to rely on a DoorDash to get some business. And it's just an interesting sort of phenomenon that we're dealing with in this economy, Santosh, which makes me think of Airbnb, which is not in that sort of winning position as a result of the pandemic, and what that might mean for its debut.
Yeah, I think to some extent it was a beneficiary, but not as much as DoorDash. They benefited because the hotels did not benefit from the pandemic. So they got that business. And the way they're set up in the remote areas, rural areas, and the independent houses, I think all that played into Airbnb's hands. So I think they're set up well, but it's nowhere close to what they were before the pandemic. And they're getting there. So for them, it's really getting up to speed. So there's a whole market ahead of them. It's the best of breed. Brand name, market share, brand share, mind share, everything. So I think Airbnb will be a good story. It is a real business. It's close to profitability. They have right-sized the business, and they manage it very well. And I think that's the beauty of this thing. The whole business model is very, I would say, very resilient, and they've managed the whole thing very well, and they're very well set up for the post-pandemic world.
Shepard Smith here. Thanks for watching CNBC on YouTube.